Hello everyone, George DeSantis here with a look at the market for the week ending Friday, April 24th, 2020. And before we take a look at stocks, may I wish everyone good health, and I hope that you're all avoiding this virus. We're all trying to avoid it because it's a bitch of a virus. So many people are infected and so many people have died. Um, let's hope that we don't have to suffer this so much longer. Anyway, before we start looking at charts, let me bring up the disclaimer as usual. And the disclaimer simply states that this is not an attempt to give any particular person investment advice because I'm really not a professional investment advisor. I've been trading the market for, I don't know, over 40 years now, and um, and I find that if I get my thoughts together on a weekend, and I used to write it out before I made a video, and with my nephew's help, I learned to do a video. So we post it as a YouTube and video, and anyone can take a look at it. But by no means is it an attempt to give personal investment advice. So let's close this off and begin to look at some charts. So we'll start as usual with a weekly chart of the S&P 500. Um, and as you know by now, first thing I like to look at is the relationship of the moving averages to each other. So we have a 4 exponential moving average in yellow, and we have a 9 exponential moving average in red. You can see that on this weekly chart, the 4 is still below the 9. So we still, technically, we're still in a, according to the moving averages, these two moving averages, we're still in a downtrend. In addition to that, we have the 30 weighted moving average, front weighted moving average in green, above the 9 and that above the 4. So we haven't quite made the crossover yet, see? So what I think I'm looking at here is you have the 50-day moving average at this magenta line here, or red line. I think it's magenta. So you have a lot of resistance in this area. You also have the resistance of the 50% retracement level, this level here, this line here. We're just slightly above it. And you have resistance at the 50-day moving average and the 30 weighted moving average. So while we're still looking to be trending up, and of course the parabolic is still below the most recent bar, so we're technically, by the parabolic, we're still in an uptrend. There's reason to be cautious here until we break above these two moving averages, the 50-day moving average and in this case the 50 week or 50 period, and of course the 30 weighted moving average here. So let's keep that in mind. Now, if we look at the MACD histogram, the MACD histogram continues to trend up on the weekly chart, which is good, which is bullish. Trending up from below the zero line is always a good thing. And then if we look at the next indicator here, Williams percentile, we are still above the magenta line, that minus 50 line. So that's still showing bullishness of the chart. And the sum of the rate of change indicator is still below, it seems still below the 4% line. Yeah, it's still below the 4% line. So that does not confirm the uptrend. That's the only one really. And stochastic is trending up. So basically on the weekly chart, we still have a nice looking uptrend, but cautionary flags at about 2,960 or so on the S&P. Let's look at the daily chart. So here's the daily chart of the S&P 500. Again, if you look at the moving averages first, you look at the 4 is above the 9, and it's still there. The yellow line is the 4 exponential moving average. the red line is the 9, and the green is the 30 weighted moving average. So insofar as moving averages are concerned on the daily chart, we have an uptrend. And again, we could see some pressure here. In my opinion, we find so much resistance here at the 50-day moving average, this magenta line. You could see there's a lot of resistance here. We just went above it here. We went above it here, but we came back down. We're hitting that line again, and we're just above it. So I'm a little cautious here. And given the fact that so many people are arguing for a double bottom rather than a V-shaped bottom, and we don't know when that would develop, if it develops at all, I'm being cautious. I have a lot of cash on the side here now. I have a couple of stocks, but I have a lot of cash on the side. And so you're looking at parabolic here. It switched above the recent bars, and it's still above, Friday's bar. It's still above there. So last week it switched, and that indicates downtrend on the daily chart. So take your pick. Is it a downtrend or an uptrend? We got a bull and bear tug of war going on. On MACD histogram, we have MACD histogram trending down a bit, but frankly, this is not so significant as if we had a bearish divergence, let's say. Now, what is really very encouraging from a bullish standpoint is Williams percentile. I like this indicator a lot. It doesn't present too many whipsaws, and look at where it's positioned. It's nicely positioned above the magenta line, the -50 line, and it's been confirmed by the sum of the rate of change indicator. So if you, like my friend Alex would say, if you put a gun to my head, I'm going away for a month, and you put a gun to my head and you say, George, you must make a decision. You either have to buy or sell this market, buy it or sell it short. What are you going to do? I have to go long. I have to buy it. But I know that there is some resistance up here, but the preponderance of evidence is it's an uptrend, and I am a trend player. And let's quickly look at some charts from stockcharts.com. This chart is Apple's daily chart. You could see that it rallied from this bottom here after this printed this hammer, and it hammered out a bottom and it rallied nicely. It pulled back into the buy zone between the 9 and the 30. You see, between that 9 EMA and the 30 EMA, it pulled back here, and now it's rallying up again. The big question is it going to print a double top or in this area here, or is it going to continue to go higher? We'll find that out pretty soon. So here we have Alex's chart with the impulse indicator that he created. Bars painted red, green, and blue. Blue is, when it's painted blue, we are allowed to go either short or long. So you can see that uncertainty as we saw on the TC2000 charts. Right in this area here, there's a lot of uncertainty. The McClellan oscillator is looking pretty bullish. You can see it's above the 50 and the 200-day averages. So that's pretty bullish. On this chart of the percentage of stocks of the S&P 100 above their 200-day moving average, you can see that it's at 35% now. We really need to see that above 50% to be really more bullish on this market. You see, it's not quite at 50 yet. So that may be a reflection of what we were looking at earlier in terms of that struggle between the bulls and bears. We don't know yet. We'll see. So let's turn to some charts on Shaken Analytics. And you can see this is SPY, which is, of course, the ETF of the S&P 500. And the first thing I notice here is that this long-term moving average, prices are still quite a bit below there. And until we break above this, the power rating is going to remain neutral, Notice as long as it was above, it was bullish, and it turned neutral here in this area when it crossed below the long-term average. It's approximately a 200-day average. So this is that resistance that I've been talking about. You know, might find resistance here. Now it's been overbought according to their indicator of overbought and oversold, and it's now coming back down. It's in neutral territory. Let's turn to the sectors of the market now. The ETF sectors, the spiders as they're called. And on the very top, you could see that XLV, the healthcare sector, is very bullish. Of course, it's above that long-term average. See, it was overbought and it started to come back down as a neutral territory, but it's outperforming the market. And as I said, it's very bullish. And you can see the other ones. This is in NASDAQ, but this is the leveraged ETF of the NASDAQ. As my friend Mike reminded me, you know, you got to be very careful with these Direxion ETFs, because just as they go up very quickly, they're leveraged 3 times, you know, 3x. They come down very quickly, and of course they reset every evening. So be very careful if you touch this one at all, if you trade this one at all. And now you can see that XLC and XLK are the next best performing ones, and XLP, which is consumer staples. So these are the top performing ones, and I would own a few of these: the XLV, XLC, and XLK. I also have the NASDAQ. So let's take a look at something. Let's turn to that list that I've labeled anyway. Stocks for the lockdown. You could see 5 of them are bullish or very bullish, 6 of them are neutral, and 6 of them neutral, and 1 bearish. So the top one here is Akamai. I'll just go through these pretty quickly. You could take a note of them. Just pause the video. I'm sure you know how to do that, and take a look. Just take a note. Now we look at some of these here. We look at Box. Now you see that one is oversold, and so this is one that I would consider buying here. It's oversold. Citrix is neutral, and but the rest of the indicators are looking pretty good. They're bullish. It's bullish. It's outperforming the rest of the market. And even though it's in neutral territory, it's not overbought anymore, and the money flow is pretty good. Kroger, I used to own it, and it's still a steady eddy here. Still a steady eddy. This is a very cheap stock. You have to remember that these stocks may have a low float or low volume, and we have to be very careful if we attempt to buy these, because the float is very small. DBX, which is Dropbox, that's overbought, but it's one of those that is bullish. Well, it's actually neutral now, and I want to be careful with that. Now, Teladoc, I used to own this one. I don't own it right now, but it's now overbought. I would wait for it to pull back. DocuSign, that's overbought at this time. Same thing here. I would wait for pullback. I like this one, Crowd, but it's in neutral territory. CrowdStrike. It's in neutral territory, but I noticed that it's changed its personality. It went from a bearish, what do you call it, a relative strength, a negative relative strength, to a positive one. So I'm keeping an eye on that. I believe I bought some of it. Here's Peloton. Now this is interesting. Barron's reports that it has a very high short percentage of shorts, and they're suggesting that it's not Barron's. I'm sorry. It's StockCharts.com, and so it's an interesting one because of the very high shorts, high percentage of shorts. We just have time for a couple more, and you can see here that on the low volatility stocks that I made up a chart list of, Microsoft is listed and BMY is listed. Okay, folks, I hope you have a good weekend, and we'll try and do this again next week.